Ladies and gentlemen, welcome back. We have a Q&A video here today. Probably my favorite type of video to make on the YouTube channel. I make them every 1 to 2 weeks, depending on the market environment. And I post a poll here in my YouTube community post section. Ask me a question about the market that you'd like to see answered in an upcoming video. And you guys always leave some insightful stuff. Stuff that I'm not looking at sometimes. Stuff that you want my opinions on or want clarity on. And it's just good to hear from the community into what you guys are interested in hearing from me. And that's what we've got here today. You guys have left a bunch of questions. I can't answer them all, unfortunately, but I've kind of picked out the ones that I think are most relevant and most interesting and the things that I have the most to say on. And, you know, we've got questions here about what happens next for altcoins. Do we see a correction first before the pump? We've got questions about something Mega Whale Crypto actually brought up recently as a theory, not as a prediction, but as a theory, which is the August top, the potential August top. I'll respond to that. A question directed about small cap altcoins. When will small cap altcoins start moving? And I actually have some, I guess, you know, sideline comments to make in regards to that, in regards to whether we should even expect that at all, and what that would look like. So kind of discussing the more technical part of altcoin season and how money flows through altcoins. A recommendation for an exit strategy for people who are holding coins for this bull market. What will happen if Bitcoin breaks $130,000? $130,000 being a pretty important level for Bitcoin, in my opinion. A question asking me to explain what actually is the 18.6 year real estate economic cycle theory and what, you know, the connection between that and the 4-year cycle and whether or not that means we can break the 4-year cycle. So it should be an interesting video, guys. Obviously, I can't go into full detail for, you know, all of these questions. I try to keep it brief because there's a lot to get through here, but I try and give you enough information that I think you need. So before we get into it, please go ahead and check out the Bitunix Exchange. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global, it's non-KYC, it's never been hacked before, it's got all the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers. All right, guys, let's get into it. First question. Do you think we could get a 20 to 30% correction on altcoins before the altcoin season? Or do I think it's straight up bullish right now? Well, let's put some facts on the table here. Bitcoin has hidden resistance at 123,000. That level comes from this chart right here, which we'll discuss more in a moment later in this video. But $123,000 is actually a major hidden resistance level. It's about a decade old. It goes backwards from 2013. It's not random. It's not abstract or arbitrary at all. It's very real and it's very precise. So 123,000 is a resistance zone, and the current support zone is here in yellow. Now that support zone actually goes backwards to 2017, cuts through the 2021 all-time highs, and was previously a resistance zone. We broke it, now it's support. So Bitcoin has resistance at 123, it has support at 115, which means what we're seeing right now currently is actually a consolidation. Not a correction per se, because we haven't broken down from structural support. We're just consolidating between support and resistance. And so as of right now, I see no evidence at all to suggest that we are in a correction in the market. We're just in a consolidation. And the question is, well, if that consolidation remains, how far down can we go on altcoins within the bounds of that consolidation? And in order to answer that, all we need to do is look at the total 3 cryptocurrency market cap. What led to the parabolic breakout we've seen over the last couple of weeks on altcoins? Well, one of the things that led to it was this break of a neckline of resistance in green. You can see it there. I've just circled it on the total 3 cryptocurrency market cap. Now that neckline of resistance, which is now support, right, would be touched if we were to drop something like 6 to 7% from the current price region, right? Now it seems unlikely to me that the total 3 would drop below that level after fiercely facing it for resistance on multiple occasions and finally breaking out of it with a volume surge. It seems very unlikely. And that would only really happen, in my view, if Bitcoin was to drop back under this yellow line and drop back under 115,000, which again seems relatively unlikely in my view and would make the charts quite messy. So I think with the current charts, there's no reason to be expecting a 30% correction on altcoins. That seems very pessimistic. And what I will say as well is that I don't necessarily think that altcoins are really, really bullish either in this consolidation. Although we've seen excellent breakouts on altcoins and clearly the seeds for an altcoin season have been planted. At this point in time, as we speak currently, Bitcoin is at resistance, and the Ethereum BTC chart, the chart that measures the strength of Ethereum against Bitcoin, hence the strength of the altcoin market pretty much against Bitcoin, is actually sitting at resistance as well, coming from the 50 exponential moving average and coming from a horizontally clearly observable resistance zone. And so what this means is basically, although altcoins aren't correcting and although Bitcoin isn't correcting, it seems like Bitcoin will need to lead the way once more before altcoins can make a major move again. So I would be expecting the next altcoin move, dramatic altcoin move, to happen once Bitcoin is cleared its level at 123,000. And probably not before that point, due to the resistance we're seeing on the charts that measures the strength of Ethereum against Bitcoin. So I think both Ethereum and altcoins right now are kind of just chilling, not actively correcting, but taking a break, taking some breathing room here before the next leg. And of course, if we break down from 115, or if something happens badly to the downside, we can simply adjust that bias. You know, we have to be very careful when throwing out these numbers. 30% correction from the high we've seen would take us all the way down here. 20% correction would take us all the way down here. That's extremely aggressive given what we've seen at this part of the cycle, and given the recent macro breakouts we've seen. You know, that would only really happen if we had very, very negative movements on the Bitcoin chart. That would actually probably throw the whole bull market into question to begin with. So no, I don't expect a 20 to 30% correction. Something a lot smaller would make sense, but currently we're just consolidating. Right, so I've got a question here. What do you think about Mega Whale Crypto's theory in which he thinks there is a chance the 4-year cycle could break? In a recent video, he says there's a possibility Bitcoin could top out in August. Now, I'm actually going to answer this without bringing up charts because I think there's actually some degree of misrepresentation here. Mega Whale Crypto does not think the 4-year cycle will break. He thinks there's a chance. Of course, as you said, the 4-year cycle will break. And there's a very big distinction between those two things because I think there's a chance the 4-year cycle will break as well. I'm not, ride or die with the 4-year cycle. It will break eventually. That's a certainty. It's just a matter of when it will break. And at this point in time, given the fact that it's a date range trend, unlike many, many trends which break all the time, which are based on price, they get destroyed because of diminishing returns. The 4-year cycle has no diminishing returns. It's a date range trend. And so hypothetically, it could remain valid for a very long period of time before it eventually breaks. Now, that's not a certainty, of course. We can break it this cycle. But the fact that it's a date range trend rather than a price range trend basically avoids many of the problems that make price range trends short-lived. Now, Mega Whale pointed to a developing micro trend within the 4-year cycle that said we could top out in August, but of course, he pointed to only one developing micro trend within the 4-year cycle. The one that says we're going to top out in August is the earliest micro trend within the 4-year cycle. There's many other micro trends you can look at within the 4-year cycle that point to a broad date range, which go later than October, earlier than October, around October. The reason why I've chosen October is because October seems to me to be the most likely zone within the 4-year cycle that will top. And that is because it is not based on any assumptions, okay? The assumption that Whale was making when he was looking at that potential August top was an assumption that cycles are essentially shortening each cycle. The assumption I'm making when I say we're probably going to top out in August as per the 4-year cycle is an assumption that is not based on any other assumptions, okay? It's not based on the cycle lengthening, it's not based on the cycle shortening, it's literally based on the cycle doing exactly what it's done historically speaking, which is loaded with much less speculation and based in much more real data. The trend that we have, for example, let's just take one of them, 1,064 days between bottoms and tops, which has been correct on both prior occasions and seems like it would be correct again this time, is very straightforward. There's nothing we can do to change that. It's 1,064 days exactly. Very simple. We know when Bitcoin bottomed out, therefore we just take that date and we add on 1,064. It brings us to October 27th this year. There's nothing I can do to change that. There's no assumption I need to make about that. And that's something that I can't say for other potential speculative trends within the 4-year cycle. So I will say this, and just be very fair to Whale here. He's not saying we're going to top out in August. He's not saying the 4-year cycle says we're going to top out in August. He's saying, just to be very clear, that a micro trend within the 4-year cycle says that August could be the top, right? But that micro trend, in my view, is quite weak in comparison to the bulk of the data. But yes, technically speaking, if we topped out in August, that would technically be a 4-year cycle top. It's just a very unlikely variant. I can sleep very confidently at night knowing that my kind of it's not prediction, but my observation, my extrapolation of the cycle, saying we're going to top out around October is the most objectively based one. I stand by that, and I'll debate anyone on that any day of the week. And Whale agrees with me on that, by the way. I'm going to take the most interesting part of the question here from Liam. It seems that low cap altcoins haven't felt the move yet. How soon can we expect them to move, and for how long? You're very correct there, Liam, right? If we look at the total cryptocurrency altcoin market cap, right, what we see is that the altcoin market cap is up from the 22nd of June, 41%. Meanwhile, Ethereum, the lead altcoin, is up about 72%. So Ethereum is almost doubling the performance of the broader altcoin market. Now, why is that? It's because of the way that money flows in cryptocurrency, and it's perfectly normal, okay? At the end of a bear market, when Bitcoin bottoms out and the market environment flips bullish again, people throw their money from USDT into Bitcoin. They buy Bitcoin first. They're not confident enough to buy altcoins. There's no hype in the market. Altcoins are down on the floor. No one's buying altcoins. They're all buying Bitcoin. Bitcoin rises. We get to the point in the cycle we're in currently where Bitcoin's been going up for a while. Bitcoin's getting very high up in price, and people start seeing altcoins as a way to make more money, to get more returns, and the market environment's just very positive in general. So people flip their money first into Ethereum. They go by risk, okay? Everything is risk reward with traders. They see that Bitcoin's been rising, right? Ethereum hasn't been rising as much as Bitcoin, and so they see an opportunity in Ethereum. Then when Ethereum rises, which is what's happening right now, Ethereum is outperforming the altcoin market. It's going to come to a point eventually where Ethereum is very, very high up. People don't see any potential benefit in investing in it, and they see only an option to flip their money into altcoins. From that point, altcoins will rise. There will be nowhere else for the money to go. Okay, small caps run last, generally speaking. And when there's nowhere else for the money to go, there's no other avenue for people to look for better returns, everything crashes downwards because people just decide to sell en masse, okay? And that cascades into a snowball effect, and people flip their money back into USDT, wait for the bottom of the bear market, and then restart the cycle by buying Bitcoin again, okay? So with this money flow cycle explained, we are basically at step 2. We are at the step in which Bitcoin is kind of simmering down, and Ethereum is starting to outperform Bitcoin dramatically, and Ethereum is actually outperforming altcoins as well. Eventually, after Ethereum runs for a while, which could be over yet, could be over currently, we don't know yet, maybe it runs a little bit more, maybe it outperforms the market a bit more. Eventually, there's going to be a time period in which, and it happens every cycle, I could show you the data for it, Ethereum starts underperforming against broader altcoins, and generally speaking, the large caps run first, the medium caps run second, and the small caps run third or last, but that kind of blurs together at some point. That's why I just have alts there, not large cap alts, small cap alts, medium cap alts, just alts. So how soon can we expect them to start running? Well, if we're going off the 4-year cycle, we have about 3 months left until Bitcoin tops out. Okay, altcoins generally run an extra month. Let's just say an extra month. That's generally what happens. So we can't really say anything other than soon. I know that's not a direct answer, but all I know is this: we are at step 2. Obviously, we need at least a couple of months for altcoins to run. So I would say within the next month or so. And how long will they run? They'll run just as long as altcoins generally run, which is just about 3 weeks after the Bitcoin top. If we are going off the cycle, the Bitcoin top will be around late October. It's very difficult to be exactly precise, but somewhere around there. So they'd run a few weeks after that, right? If it is exactly late October, we're looking at mid-November, right? But we can't be that precise. Again, it's difficult doing these kind of videos because I would really like to spend 10 minutes answering a question and bringing up every single chart relevant, but I just simply can't do that for time restraints. A question about an exit strategy for the end of the bull market. Okay, this is a very important question. I'm probably going to answer it in a way that many people might find a little bit confusing, because obviously I sit here and I talk about the 4-year cycle all the time. But please be very clear. That doesn't mean I think we should just blindly sell in October. This is why I love the 4-year cycle so much and why I keep raving on about it, because it gives us guidance. It doesn't mean we sell in October regardless of anything. It means that if we reach October and we are seeing weakness clearly, we sell. If we reach October and there's no weakness, okay, maybe we keep it, we keep running for a little bit. Maybe we let it keep going. And maybe eventually the 4-year cycle will break and we wouldn't have to sell at all, right? But point is, if we get to October, 4-year cycle's deadline, and we start seeing, for example, the RSI on the monthly chart on Bitcoin reaching resistance that has led to the top on all 3 prior cycle occasions, right? That would be a sign to sell, of course, right? If we don't have anything as clear as that, what I'd be looking for, and this is the part that's, most relevant in all circumstances, what I'd be looking for primarily, if we're not seeing anything like this, anything clear like this monthly chart RSI level being reached for resistance in October, obviously that's a clear sell signal for Bitcoin, and then you hold Ethereum a little longer. If we don't see anything like that, you're literally just looking for a structural breakdown, okay? Number one, 101 TA. Structural breakdowns and structural breakouts mean everything. If you are going to react, if you're going to buy, if you're going to make macro decisions, you need macro validations. And macro validations come when macro ranges break, okay? The macro validation, very simply, for buying Bitcoin very recently, or buying anything recently, was Bitcoin breaking above this line right here, right? That line that was clearly acting as resistance. That was a clear resistance line. We broke above that. That was a macro buy point, right? That's your macro validation. Same thing applies to the downside. When you see macro validation of a breakdown, when you see Bitcoin, for example, flipping into a lower low for the first time, we break below that low there. That is a flip of the overall macro trend and clear evidence that the trend has reversed and we are entering a bear market. Another thing, another warning sign could be Bitcoin flipping below its recent highs, right? We have highs that have been established in that 100K to 115K region. If we drop below those highs, what are we doing, right? We're entering a very bearish macro circumstance in a time of the cycle in which we're meant to be very bullish, right? Using common sense, that would be a sign to get the hell out of the market. And the same thing would apply for altcoins. There is a kind of differentiation you need to make between Bitcoin and altcoins, because altcoins do generally run a few weeks longer than Bitcoin. If we do see a regular Bitcoin top as per the regular 4-year cycle, that doesn't mean you sell altcoins with your Bitcoin. It means you get the hell out of Bitcoin, if you haven't already done so, and you watch altcoins very, very closely. And again, you're waiting for that macro breakdown confirmation, not only on your individual altcoins, but also on a chart like the total 3 cryptocurrency market cap chart. So unless we have clear evidence of, for example, this line here on the monthly chart being reached for resistance at the exact time the cycle is expecting a top, in which you're willing to take a very, I think, solid bet that the cycle's over, then you'd sell, right? But if we don't see something like that, which there is a possibility that we don't see anything like that, right? It's a little bit more confusing than that. Then what you're looking for is macro validations for macro decisions, which is going to come through macro breakdowns. And that is, in my view, common sense and a pretty 101 basic trading strategy. What I'm trying to say is, don't just blindly sell in October just because the 4-year cycle says so. Only sell if you see external validation of the cycle showing weakness around its expected deadline. And if you don't, rely on those macro breakout combinations. If Bitcoin breaks above 130,000, could it reach 430K or very high price targets, or extend the 4-year cycle? Now, let's be clear here. Where does 130,000 even come from? $130,000 comes from this logarithmic regression channel right here and the power law chart on Bitcoin. And it's becoming less and less relevant by the day, quite frankly, because this chart right here is basically a chart that measures the angle of ascension from tops to tops and bottoms to bottoms on Bitcoin. And assuming the cycle basically keeps doing this, assuming we top out in October, this resistance zone would be sitting at about 130,000 in October. Now, that would mean basically that we'd see a 130K top in October if this trend remained, if we didn't break this channel. Same thing can be said about the power law chart. Resistance line in green on the power law chart, which has been relevant many, many times over, in the last year and a half, reaches 130,000 in October as well. So 130K is an important zone, and it's something I'm looking at closely. But it's becoming less relevant to me, as time passes, because we're already reaching the resistance zones that we would hypothetically be reaching at 130K in October right now. And given the fact we have months left in the cycle, it seems likely those zones would break and 130K would become obsolete. So it's kind of a rough breakdown there. It was very quick, of course, but I don't feel the need to emphasize it too much because I don't see it as particularly relevant at this point. But the point is basically 130K is something I was looking at for quite a while because there was, 2 independent charts, which are both very important historically speaking, saying we'd be at 130K for resistance in October. But that's, again, becoming less relevant as time goes on. Now, this guy's question, Matt, asks, if Bitcoin breaks 130K, would we go much, much, much higher? Now, I think the issue with that question is it was never really about 130K. It was about the trends that would reach 130K in October at the cyclical deadline. So 130K is kind of irrelevant unless it's in October. Right now, the same level that says 130K in October is relevant is actually saying that 123K is relevant right now on both the power law chart and on this channel. Now, as to whether Bitcoin will go significantly higher if it breaks this channel, for example, yeah, it probably would. But I don't see any reason to think it'd go to 430k. I don't really know where you're getting that target from at all. In fact, the reason why 130k was so interesting to me is because I don't really see any other logical reasons to assume any other particular price target would be reached. There's no trend saying we're going to 180, or there's no trend saying we're going to 250. And if there are, they're stupid trends like Plan B's, logarithmic regression formulas that have been wrong every cycle so far. So I actually don't know where Bitcoin will go if it breaks this channel, or if it breaks this power law chart green line. I do know it will go significantly higher. And what I do know as well is that us breaking anything on the price chart means nothing to the cycle. The cycle is based on dates, not price. So even if we broke this level, that wouldn't be an invalidation of the 4-year cycle. It would just be a break of this channel that has held thus far. And that would be a very bullish thing. Can I explain the 18.6-year economic cycle? And can I explain whether or not this will lead to a break of the 4-year cycle? No, it won't. The 4-year cycle is a byproduct in a lot of ways of the 18.6-year economic cycle. It's also a byproduct of the presidential cycle. It's a byproduct of a lot of things. It didn't just come about randomly. In fact, Bitcoin was probably, in my view, strategically planned, and the halvings were probably strategically planned to release in a way in which it became very likely the 4-year cycle would form based on these other cycles in the macroeconomy existing already, like the 18.6-year cycle. I can't describe it as well as someone like Jason Bazzino can. He's a very big proponent of it, but here's basically the 18.6-year cycle. It's an 18.6-year trend, and essentially it says we're going to be in a bull market until the end of 2025 or early 2026, which lines up with the 4-year cycle, and then we're going to enter a bear market, and we're going to enter another bull market in 2029 to 2030, which again lines up with the 4-year cycle. So, the 4-year cycle and the 18.6-year cycle are in a lot of ways basically the same thing. The 18.6-year cycle just exists in the traditional markets, and the 4-year cycle exists probably as a byproduct of things like the 18.6-year cycle. So there shouldn't really, in theory, be any deviation between the two. Like the 18.6-year cycle existing doesn't debunk the 4-year cycle. In fact, it supports the 4-year cycle. So I'm not concerned about that at all. I do see a scenario in which both of them break eventually entirely. But currently, again, the trend is your friend until it ends. And one of the reasons I like the 4-year cycle so much is because it's got the support of things like 18.6-year cycle. I feel like I've been talking about 4-year cycle a lot in this video. I apologize for that. But clearly you guys are interested in hearing about it as we approach the end of the cycle. So guys, thank you for watching. I hope you enjoyed. Please leave a like, comment, and subscribe. Apologies if I seemed quite rushed in this video. Had some technical difficulties and had to re-record the whole thing. So that wasn't fun. So obviously I was trying to kind of get through it here today. But please check out the Bitunix Exchange to help out the channel if you're interested. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.